Prabhudas Lilladher has shared their stock picks for this festive season with us, and we have a special lined up for you. Well, after seeing muted sales in September, automakers have set their hopes on the upcoming festive season. New launches and improved consumer sentiment is fueling optimism this time around. So is the auto sector on the road to recovery? To discuss this, we're joined by Rohan Korde, research analyst at Prabhudas Lilladher. Rohan, thanks so much for joining us. I'm going to start off with talking about this festive season. How are things looking? Because it's been a pretty bad patch for auto companies. Are you seeing a pickup? What is your initial assessment of it?
Well, the initial assessment is that there has not been a great pickup for the sector. Two-wheeler sales during Navratri, particularly in the rural region, were very weak. Even the four-wheeler companies are offering discounts to bolster their sales. So it's going to be a bit of a tepid festive season for most of these companies. I think the trend of discounts that we had seen in Navratri should also continue in the month of November.
Break it up, Rohan, into the three segments or four segments that we are seeing over here. The most positive as far as auto was concerned was the commercial vehicle segment. What's your prognosis over here?
Well, commercial vehicles till September had a great run. We had a low base. We had a change in norms coming in with effect from 1st October. So we had compulsory ABS and a few other regulatory changes coming in. I expect the third quarter to be lower as far as growth rates are concerned, because not only because of the higher base, but also because of a bit of pre-purchasing and a bit of inventory build-up which would have happened from the CV manufacturers. LCVs, of course, it will be probably into FY17 that we start seeing the growth rate for LCVs go up. M&HCVs third quarter should be on a lower growth rate, and we can see recovery or a higher growth rate in the fourth quarter.
Fair enough. The other segment is tractors. We've been hearing of a lot of reports of the rural angst really hitting tractor sales drastically. So how is that piece panning out, or do you think it's going to get worse before it gets better?
Well, that's a segment which has direct correlation with the problems we have seen in the rural segment with unseasonal rains in the early part of the year, then inadequate rainfall in the normal monsoon season. However, looking at the tractor space, the segment has been in a slowdown for more than 1 year. I do believe that while third quarter will not be encouraging for the tractor segment, we can see signs of growth, signs of recovery in demand coming in from April, and as the companies start building up for the next monsoon. In the meantime, with the lower base, we can have odd months of growth coming in the tractor segment, but it would not really constitute a recovery for tractor demand as such. We will have odd months of growth and a few months of decline, so we'll be anywhere between the -10 to +5% kind of range until March.
Okay, let's get a little stock specific now, Rohan. I'm going to start off with the two-wheeler segment. Bajaj Auto has been a winner today. It's been a stock that has seen a bit of re-rating over the last couple of months, actually. From being a laggard, it's kind of started perking up. How do you like the two-wheeler space at this juncture? Because there are two stories. One is a rural slowdown, and for Bajaj specifically, it's also the export story.
Yes, so I have been in favor of the four-wheeler space for the past year or so. In two-wheelers, relative to the sector, I have preferred Bajaj Auto, but now it is trading pretty close to my target price of 2622. So I don't see significant upsides in the near term for Bajaj Auto. From a structural perspective, with a good balance of domestic and export sales in its mix, as well as three-wheelers, I think structurally it is well poised to do better as compared to its competitors over a 2-year time frame.
Okay, let's look at the LCV, HCV and tractor segment. You know, Tata Motors has also been an interesting play. Rohan, it's gone for a re-rating. In fact, over the last 1 month, if you see, Tata Motors has been quite a performer. What's your call on this? Because there was this JLR overhang on it. It's a company which does multiple things. What do you like or what do you don't like about Tata Motors?
Well, I like Tata Motors. It's my top pick in the sector along with Maruti. Tata Motors, I think the benefit of the M&HCV recovery, while it's a positive, it's not going to materially alter the story for Tata Motors. It's all down to Jaguar Land Rover. And after so far underperforming till August, we had a good month of JLR wholesales as well as retails in September. Of course, the product pipeline for JLR is also very strong. We will be seeing ramp up on the XC. We have the F-Pace to look forward to. A few models will get phased out, but I do believe that the overall pipeline that they have of models is very strong. Of course, China is a factor which will continue to impact their overall performance, but I think the impact will start getting diminished as we move on towards the next calendar year.
Fair enough. What do you like about, do you like Mahindra and Mahindra? What's your take on that stock?
Well, as we discussed, it's the tractor segment, we'll have to wait till FY17 before see a recovery. But if you're looking at contrarian plays and companies which have got good long-term potential, then M&M is a stock to look at. While the underlying demand on tractors is going to be weak for the next few months, I do believe that the tractor segment won't go significantly worse from here on. And agri-mechanization is a theme to play for in the future. So M&M is a prime candidate which will benefit from the agri-mechanization theme. And we are also looking at the new launches that M&M has done, and that should help them regain some lost market share in the UV space as well. So it's not among my top 2 picks, but if we have a two-year time frame, then M&M is a stock that should do really well.
Okay, the real outperformer in the auto sector has to be Ashok Leyland on the heavy vehicle side, Rohan, and Eicher on the two-wheeler side, more because it's a two-wheeler story right now. So I'm going to start with Ashok Leyland. Do you think it's run up enough and can it go any further? Because over the 12-month period, it has given a sizable amount of returns. On the BSE, it's given 103% returns.
Yeah, so Ashok Leyland was among my top picks until August. But after that, given the run-up, I downgraded a notch to accumulate from buy, and my target price is 96 rupees. So I'll be waiting for the results, and the main thing to look for at Ashok Leyland is will there be a continuation of the upgrade cycle, because multiples are relatively higher, and we are no longer into the early cycle of MNHCV recovery as well. So this is a time frame when generally the multiples tend to come down a bit for the MNHCV companies, and we start looking forward to FY17 and FY18. And if FY18, if there is a visibility of the same growth rate continuing as we see in FY17, then I would upgrade my numbers. But as such, we are looking at 16 and 17, and I think from a near-term perspective, this stock is not having as much of an upside. It has delivered great returns in the past year and a half, but I think there can be some cooling down now in the momentum that the stock has shown, because the earnings estimates are also pretty high. I have an EPS estimate of 5.3 for FY17, so they really need to deliver on numbers without any odd quarter of disappointment for them to continue the re-rating cycle.
Eicher, what is your take on Eicher? Again, a big multi-bagger.
Yeah, I like the story. I think it's while two-wheelers have been driving Eicher Motors and have been responsible for the re-rating that we have seen in the stock, I think with MNHCVs coming back, there is potential for that story to also contribute a bit. Of course, Royal Enfield is expected to continue delivering good performance into FY17, and that should help the stock remain strong in the next year to year and a half.
Okay, fair enough. One stock that is in focus today is Force Motors. Again, a re-rating story, Rohan. We don't normally talk about that, but what's your take after the kind of run-up we've seen there?
No, I don't have any coverage on Force Motors, so I won't be able to comment on that.
Why is it that people don't have coverage on Force Motors, given the kind of, is it a smaller player? What is your general sense? I'm sure while you don't have coverage, you have a sense of how the markets look at this.
I think it's an interesting story. They have, it's not just an auto play, it's also an auto ancillary play, with them receiving some orders from European luxury car manufacturers. So it's a story which is still, I guess, in the process of getting discovered, and maybe over a period of time there will be more coverage on the stock.
Okay, for the record, the stock is up 236%, I think, over the year-to-date period. So that's the kind of returns we've got on that. But I'm going to ask you on the broader spectrum, you did mention that you like Maruti a lot. There has been a bit of news flow on the fact that they might not have to pay as much royalty to Suzuki. There has been a clarification. What's your take on Maruti as such? And what are you watching out from India's largest passenger car maker?
Well, if we look at Maruti, then despite being the largest car maker in India, they have been gaining market share in the past couple of years. Their new products are helping them enter into different segments where they did not have a presence. They're trying to make a mark in the not luxury, but not basic vehicles and the elite compact vehicles as well. So I think they are trying to widen their portfolio. They are trying to get newer customers into the Maruti buying story, purchase of a Maruti vehicle. So I think it's a story which will continue to do well so long as we are confident on India. As far as the royalty payout is concerned, it's something that we'll need to track more closely. Generally it happens that with new models coming in, the royalty payout is historically not been expected to go down very sharply. But we'll need to keep a watch on that.
Okay, Rohan, very quickly, what are your top picks? To sum it up, what were your top picks and where do you think you would book profits at this current juncture?
Well, my top pick is Tata Motors, followed by Maruti. And from a relatively longer term perspective, I like Mahindra & Mahindra. I'm positive in the overall auto sector, so I don't see any reason to book profits in the auto space for the next year at least.
Okay, fair enough. Thanks so much for joining us with that. That is Rohan from Prabhudas Lilladher talking about the auto picks for the year coming.